On YouTube, welcome back to another video with the House Money Investing channel. In today's video, we're going to go over some price movements as well as some stock picks for the day. I appreciate you guys for tuning in. We'll jump right into it. First here we got United States Steel Corporation. This is one of my long-term plays, something I swing trade quite often. Ticker symbol X. It was up 17.29% today, so nice little run up for United States Steel. Then we got Sunrun Inc., ticker RUN. This is also something I'm holding long term and something I will continue to swing trade. It is up 16.53% for today. Then we'll take a look at my Robinhood portfolio. As you see, I have a balance of $5,309.93. It is up $1,559.05. Total percentage gain of 41.56%. And that is over the last 6 months. And I do have a little bit of buying power of $172.17 that I will be using to swing trade during this month. Then we got CleanSpark, ticker CLSK. I have 1.63 shares at an average cost of $7.06. It was up today $16.60, up 36.92% for the day. This is an initial investment of $11.51. My total return is $50.05. I'm up 434.73%. So massive gains for CleanSpark. My market value is $61.56. So basically my $11.51 is now worth $61.56. This is 1.2% of my overall portfolio. Then we got some Bitcoin gains. I have less than 1% of a coin here in Bitcoin and Robinhood. My average cost is $11,131.04. This was an initial investment of about $109. That $109 has now turned into $363.97. This is 7.08% of my portfolio. It was up today $15.79, up a percentage of 4.53. My total return is $254.83. Total percentage gain is 233.49%. Then we got Bitcoin and Cash App. It's valued at $2,024.91. This is a total investment of $327. I've been making over the past 6 months. And as you can see, $327 has turned into $2,024.91. So I have pretty much almost 6x my money on Bitcoin. Then we got Bitcoin in the eToro app. This is a $47 investment I made back in September when Bitcoin was at 11,700. Now Bitcoin is valued over 37,000. My $47 is now worth $147.88. It is up 214.65%. Total profits being $100.88. Then we have Cash App Bitcoin again. So it ran up from 2024 to 2051. Then we got Bitcoin in the Robinhood. It was up 254. At this point, it's now up 260. Then we have Bitcoin in the eToro. It was up 100. Now it is up 102. Then we got Ethereum in Robinhood. I got 29% of a coin. Average cost is $355.05. This is an initial investment of $103. My $103 is now worth $354.08. 6.87% of my portfolio. It was up today $27.01. Percentage gain of 8.26. My total return, I'm up $251.04. Total percentage gain is 243.64%. Then you got Bitcoin Cash. I got 8% of a coin. My average cost is $232.38. And this was an investment of $19. And that $19 has turned into $38. So my total value at the moment is $38.26. It is 0.74% of my portfolio. It was up $2.37 today, or 6.59%. My total return is $19.07. Total percentage gain of 99.35%. Then back in the Robinhood, let me see here. I was up $1,559. At this point, I'm now up $1,577. So it is up 42.05% at that point. And then we'll get into some stock picks here. So we got Wells Fargo, ticker symbol WFC. Banks are a big bounce back play for the year. If you've been watching my channel, I've been calling this out for a while now. Wells Fargo is something I hold long term, and it's something I'm going to continue to swing trade. I am up 31.51%, on my position in Wells Fargo. As you can see, it had a nice day today, up 7%. With the share buybacks and the economy opening up, and the the interest rates and the rent and mortgages and things like that going to start being paid, these beaten down bank stocks are definitely comeback plays. So you got to get into Wells Fargo, Bank of America, JP Morgan Chase, just to name a few. Here is Bank of America. This is my next stock pick for you guys. Something I added right back to the watch list, as I did with Wells Fargo. It is something I hold long term. I am currently up 11.90% on my position in Bank of America. I do have Bank of America and Wells Fargo in several different brokerages. I do have a total of 12 brokerages that I use. So the percentage game, I'm just speaking on what I have in Robinhood, since that's the app I'm on. Bank of America had a nice day today. It's up 6%. And similar to Wells Fargo, it's just a bounce back play. And then we have another ETF that I've been swing trading this month, which is SPY-V, Spider S&P 500 Value ETF. I am currently up 1.23% in this position. It pays a solid dividend of 1.53%. This is something I just got into back on the 11th of December. And this is going to be a value play for the S&P. Of course, it was beaten down about 30% during the pandemic. Still finished the year strong, up 15%. And this is something that usually gains, I would say, about 17% a year, plus pays out that nice dividend. So, love Spider funds. Definitely love funds when they're dealing with the S&P 500. Then we got SPY-D, another Spider fund. This is a high dividend ETF. This one was beaten down about 40% during the pandemic. It's trying to make it. It's making a comeback. I see. I'm projecting about 13% gains here in 2021. I'm currently up 2.58% on my position. Nice, very, very nice dividend of 4.99%. I've been trading this one since back in November. So yeah, definitely love ETFs. A lot of diversification, low volatility is something that's not going to fluctuate much, but it's also going to be a nice way to earn some monthly, quarterly, or yearly income as well. Then we got ticker FNOV. This is something I'm already swing trading this month. Added it right back to the watch list. This is a US buffer. This one was also beaten down about 20% during the pandemic. Still finished up 11% on the year. This is a new IPO, so great. It was beaten down for the pandemic. A great bounce back, so a great growth ETF fund here, which basically it buffers losses and gains capped on the SPY ETF over a Pacific holding period, and it's also actively managed, and it performed great. That's why I'm continuing to swing trade it. Then we got DFEB. Also something I've already swing traded this month. Added it right back to the stock list. And this thing has been doing very well for itself as well. New position, new IPO since February. Immediately went down about 13% during the pandemic. Still finished the year strong, up 5%. So this is another great fund, great growth fund. And it basically does the same thing as the last one, which buffers losses and cap gains from SPY shares over Pacific Holding, and it is also actively managed. Sometimes you'll get some overlap with these ETFs, But for the most part, they're all kind of unique in their own way and a little bit different about how they go on about the shares that they contain in those ETFs. Then we got ticker DNOV. This is another one, like everything else, beaten down during the pandemic, down 13%. Still finished the year up 7%. This is a new IPO since November. Also a great growth fund. And, it, again, buffers the losses and the cap gains on the S&P ETF over Pacific Holdings. And it is also actively managed. Then we got ticker DBOC. Another play I'm already into. Added it right back to the watch list. And this is a double stacker non-buffer ETF. Recent IPO in October. Didn't start off too hot, but it bounced back. It went down like 1% basically immediately. Bounced back up. Finished the year off up 6%. And this aims for accumulation of cap gains on the S&P and QQQ shares while providing a buffer on S&P losses over Pacific Holding. And this is also actively managed as well. Then we got SBE, SPAC, merging with ChargePoint. They're in control of about 70% of the market. Biden is going to be in office. Big play on EV. EV is already a popular segment. As you've seen with CleanSpark, how far it's up. Basically because they're into the Bitcoin space, which I didn't mention. But yeah, CleanSpark acquired a Bitcoin mining company, and that's pretty much why they've been on a run. Even though they was on a run prior, but I mean that just helped to push them up. But this is Switchback Energy. It is merging with ChargePoint Energy. This thing's already up 300%. I'm currently up 141.15% in my long-term position. I'm swing trading this heavy this month, and I will continue to swing trade it. Then we got ticker SIVR. This is going to be a physical silver ETF. This is going to give you exposure to precious metals. ETF is going to be a great way to diversify yourself into those precious metal markets. It's a hedge against the fund, a hedge against the market. So you always want to try to get into silver, gold, platinum, copper, things of that sort. Of course, silver was down about 33% during the pandemic. Still finished the year up 49% on a strong run. This thing typically gains about 17% of the year. It doesn't pay a dividend, but it is a growth play, and it basically tracks the silver spot price, less trust expenses. It uses a silver bulletin, so it just basically tracks or monitors the price of silver, which has been on a run. Then we got ticker JAGG, also something I'm already into. Added it right back to the watch list. This is the aggregated bond ETF. I'm currently down 0.43%, but hey, I get a 1.76% dividend, so my dividends will outweigh my losses. This thing doesn't fluctuate very much. It's only gains usually about 2% a year or so on average, but it is a nice safe hedge as well. I love putting my money in bonds because it's pretty much like a savings account. It's not going to fluctuate very much, and it's going to gain a little bit over time, plus give you a nice dividend. So this one gaining 2% with another 2% dividend yield is basically a safe 4% return on your money. And then we have BBJP, also something I'm already into, and this is going to be Japan ETF. It's going to give you exposure once again to a different sector, which is outside of the United States. It's going to be a great ETF, so it's going to be very diversified, and it's going to be basically the top companies out of Japan. I'm currently up 1.92% in this position, also with the dividend payout of over 1%, 1.13%. And this tracks the large and mid stock best companies in the Japan market. So definitely a great ETF there. Then we got BBEU, also something I'm already into, similar to the Japan ETF. The only difference is really that this is contained in Europe, and also something that I hold long term. I'm up 0.32%. It pays a little bit better dividend than the Japan ETF at 2.33%. So definitely a way to make some passive income on the side. Then you got UAL. We're going to jump into some airline stocks real quick. Love the airline plays. They're all going to be a bounce back. UAL is something I hold long term. Of course, this thing was beaten down about 75% over the pandemic. I got it projected personally, gains at about 49-50% in the coming next year, 2021. Analyst ratings are very bullish on it and stuff like that. They just renewed its frequent flyer partnership with Chase, potentially creating room for long-term margin expansion. They increased focus on capacity restraint across the industry, combined with structurally low fuel prices, and it should boost the airline's financial performance over the medium term. Travelers are becoming more comfortable with flying, during the pandemic of the CV-19. EPS for this company, of course, fell all the way off, started making a bounce back in quarter 3. This is a company out of Illinois. It's going to give you, of course, exposure to the transport and construction services and industrials part of the industry. And basically they United Airlines, they offer like satellite based Wi-Fi, including long haul overseas routes. It transports people and cargo through North America, and its destinations are like Asia, Europe, Africa, the Pacific, Middle East, Latin America. And it's a regional carrier, so a great airline. They were doing pretty well before the pandemic. Steady sideways but kind of going up type of trend. And the pandemic just kind of wiped out all of its gains. So yeah, like I said, it's gonna be a massive gainer of probably about 49-50% in 2021. So definitely a bounce back play. I'm holding long term already. I'm going to continue to swing trade that one to build my position. Then we got another airline, ticker LUV. This is Southwest Airlines, ticker LOVE. Pretty much similar to DAL. Beaten down during the pandemic, about 50%. This one not as much gain potential as United, but I do see it gaining about 14-15% in 2021. In my long-term position, I'm currently up 18.61%. So definitely, if I can add 14% on top of that, it'd be great. And Love's actually does pay a nice little dividend of 1.58%. And very bullish analyst as well. And basically, this is a low-cost carrier, so it's positioned for a leisure lead post-pandemic and recovery in aviation because of the the ticket prices. A lot of people aren't going to have the money that they're accustomed to having to, so being able to catch a cheaper flight will go a long way. And basically, they always focus on low fares, and I think that could allow to make the recovery nicer for this company. EPS was down, made a bounce back in quarter 3. They're out of Texas, same sectors as United Airlines, and it's basically a passenger airlines. It offers like early bird check-in. You can upgrade boarding. They transport pets, unoccupied minors. It travels through U.S., District of Columbia, Puerto Rico, Mexico, Jamaica, the Bahamas, Aruba, Dominican Republic, Costa Rica, Cuba, the Cayman Islands. So basically a lot of great travel destinations, vacation destinations that they travel to with those low ticket prices. Definitely people are going to be ready to get out and go vacation after being stagnant all year long. Then we have another play here that I'm already into, been trading, swing trading heavy, Concierge Gaming, ticker CRSR. Of course, this is a new IPO, and of course this ran up during the pandemic. Everybody was locked up, so up 126% on the year. Great growth play, great EPS. Electric and hardware components company out of California, and basically they design and supply hardware components for personal computers. So definitely a great play in the gaming space. Then we got ticker Upwork, ticker UPWK. This is also something I hold all long term. I'm up 114.67% on Upwork. Upwork was affected also by the pandemic, about 36. It was down like 40%. Still finished the year up 260 something percent. So definitely a great growth play. I say on average it probably gains about 11% a year. Last year was kind of unique during the pandemic. It actually helped this play in a major way on a bounce back, as it is a growth stock. Great analyst ratings. Q3 was super outstanding. And this is a software company, out in California. It does online marketings that, basically enables business to find, people to hire. They pay freelancers for short-term and long-term projects. It offers like Upwork Basic, Upwork Plus, Upwork Business, Upwork Enterprise, and Upwork Payroll. Those are kind of like the little different sectors it has. But it's basically for freelance work. If you're somebody like like an independent contractor, instead of getting on Craigslist or something like that, you can list yourself on Upwork, and these businesses will hire you, or individual people can hire you to do certain jobs. You know what I mean? So definitely a great fundamental company, and obviously great balance sheets as well. Then we got Opendoor, ticker OPEN. Also a long-term play for me. I'm currently up 67.73% in Opendoor. This is a new IPO as well. Came out in June, and it's been up 164%. It's just been running up. Doesn't pay a dividend, of course, because it is more of a growth play. And this is an investment services system company, based out of the Cayman Islands, but it's basically, a California company out in San Francisco. And it's an online platform for buying, selling, and trading residential properties. So instead of like, going to house to these open door, you got to go in there looking, see what you want to buy and all this other crap. You basically just do it all online, But different from Zillow and Reddit is that Opendoor will buy your properties cash on hand. No going through the banks, no extra paperwork, no extra fees. They'll just buy it straight up cash from you. And they also sell homes as well. So definitely a unique business model there. Then we have Bloom Energy. This is also something I already hold long term. Bloom Energy wasn't affected by the pandemic at all. It was down like about 60%, but the reason why I say it wasn't affected is because it bounced right back and still finished up 315% on the year. And this is a recent IPO, back in mid 2018. This one I would say probably grows about 15% a year on average. Great analyst ratings, great EPS, industrial company out of California. And basically they manufacture and install on-site power generators. Its products are Blue Energy Saver. It converts standard low pressure natural gas or biogases into electricity through a process without combustion. So definitely a unique play on electricity. Basically, somehow turn a natural gas into electricity using power generators. And of course, when it's saving people money and they're still getting power, they're going to use it. So definitely a company that's been making money. Nice revenues for Bloom. Like I said, I've been holding it pretty much since it came out, and I'm going to continue to swing trade it. Another one here that I already swung trade this month, going to swing trade again, add it back to the top stock list, is ticker SJNK. This is a Bloomberg high yield ETF. This one was down about 20% during the pandemic. It's not going to really move very much, to be honest with you. Maybe 1% next year, but it has a nice dividend of 5.35%. So you're going to get about 5, 6, 7% yield, on your investment. And it's going to be super low volatility. No fluctuation pretty much at all, up or down. You're not going to see massive gains. You're not going to see massive loss. It's just somewhere, nice to hold your money with that nice dividend yield. Then we got SunPower here. This is also something I'm already into. I'm going to add it to the watch list and get back to swing trade it to build my position in SunPower. SunPower was down like 50% during the pandemic. Finished the year off strong, up 321%. You know, on average, it only gains about 1% or 2 per year. Not really the greatest growth stock, and you'll see that pretty much in the analyst ratings. It's kind of split down the middle between buy and sell. The other half is probably, you know, more or less holding. They haven't had nice EPS this year, and this is basically an industrial company out of California, and it delivers, you know, solar panel systems and stuff like that, and it sells solar energy solutions in North America region, including direct sales of turnkey engineering, procurement, and construction, and things of that nature. So basically, they do solar panels, and you know, that's pretty much why I was up, you know, so great this year, you know, just because of the fact of, you know, renewable energy being a nice hype here, you know. So I mean, I think it'll continue to grow. Definitely, it'll definitely continue to grow. Some people aren't so bullish about solar panels. I know personally people that don't use them because they say, you know, the cost isn't going to balance itself out, like it's not worth even buying the panels. But I'm sure with newer technology and lower, cheaper prices on materials, you know, they'll get it together, and they won't probably have 300% years like this year, but you know, they can at least lock in 2% growth a year, which is great over the long term. Then we got ticker ICPT. This is a new play for me. This is Intercept Pharmaceuticals. I really like this company. It has been on a downtrend, you know, for a long time now. You know, it's a growth play, but now analysts are bullish on it. You know, looking at 25 analyst rating, you got 68% hold, 32% buy. They have potential to expand to other liver disorders. They have limited treatment options, such as you know, PSC. Their liver inflation and scarring positions to the company go after non-alcoholic NASH, NASH, which will present a blockbuster opportunity. Its approval in rare liver cancer, liver diseases, primarily PBC, provides a small revenue stream to help support the pipeline of development. So basically what this is a pharmaceutical company who mainly deals with the research, development, and commercialization of novel therapeutics in treating chronic liver disease. So definitely for a good cause, and they've been doing great on EPS, you know, all 2020, and them, you know, their products are showing great results for, you know, PCB, NASH, and PSC, which are you know, certain liver disorders. And you know, something I was looking at, seeing that it was beaten down, I said, wow, this is a great value play. I like what they're doing. I see analysts are bullish on it too. Nice EPS, and you know, definitely something that's gonna, you know, start to make a bounce back. You know what I mean? Then we got ticker ESPR. Oh snap! This is therapeutic company. Also, first time play for myself. Oh, sorry. This thing was, you know, beaten down all year long. It's just like crazy how beaten down it was. You know, especially on average, that grows about, you know, 7% a year. It just didn't recover this year, so I see it recovering, you know, pretty well in 2021. You know, bullish analyst ratings from 12 analysts. Good EPS. This is a pharmaceutical company out of Michigan. It engages in the development and commercialization of oral therapies for treatment of patients with low dentistry cholesterol. So definitely a you know, unique niche sector here in the therapeutical sector. So yeah, you know, I like the growth in it. I seen that it hadn't recovered yet this year, so I'm thinking it's going to recover next year. So I'm going to swing trade it and see what happens. Then we got good old Campbell Soup, something I hold long term. Great dividend player. Great consumers packaged good company. Love Campbell Soup. I personally don't use their products, but hey, if it makes business, it makes sense. I don't, have to be personally into a product to invest in it. I know that Campbell Soup is a great company. I've seen their product since I've basically been born, and I know it's a recession-proof stock, and it's also very beaten down. I mean, Campbell Soup's due for a comeback. Super low PE ratio, super undervalued, super oversold. Great dividends, right in that sweet spot. It's at 2.83%. Most analysts are bullish. About 80% of analysts are bullish. You know what I mean? And I think for them, like removing the excess costs, their excess costs, it should afford Campbell the fuel for branding investments. Nearly 1 dozen of which generate more than $100 million in sales a year. In contrast to its peers, since the pandemic's onset, Campbell hasn't taken its foot off the gas, and it relates to marketing spending, which I see as a tactical decision, to facilitate the retention of recent wins with end consumers. With Snyder's-Lance in its fold, about half of Campbell's sales result from the fast-growing on-trend snack owl, which stands to offset the more muted long-term prospects for the mature soup category. So their acquisition of Lance, they make like crackers and things like that. Nice little brand. Definitely more revenue for Campbell Soup, as it displays that in the EPS dating back all 2020. And this is a food and drink company out of New Jersey, of course, and it's into manufacturers and markets of convenient food products such as soup, simple meals, snacks, healthy beverages. You know what I mean? It does like retail and food service businesses in U.S., Canada, Latin America. They also do cookies, crackers, bakery, frozen products in the U.S. as well. They also have biscuits in Australia, Asia Pacific, and they have cookies basically sold globally. So a nice little consumers packaged product play for Campbell Soup. Get you a great dividend. It's really been beaten down with the the Lance play coming in apart. I see their revenues bouncing back, and they're cutting access costs, putting out more marketing for their other products, because most people only know Campbell Soup for the soup. So of course the market is going to help in that aspect, and I see them making some nice gains. Then we got Clean Spark, something I showed you earlier. I'm up over 400%. Something I hold long term. Something I'm swing trading. Like I said, I'm up like 425.52%. Clean Spark has been just murdering it. Down 70-80% during the pandemic. Finished the year up 650%. This is a recent IPO since early this year, like back in January, and it's just on a run. It's on a tear. And like I said, they acquired a Bitcoin mining company, which is of course going to boost revenues as Bitcoin is steady going up. My price target for 2021 on Bitcoin was 40 grand on the safe side, and 100 grand on the very, very bullish side. JP Morgan just came out and said long term they see it going up to $146,000 Bitcoin. I think long term, in the long term scheme of things, Bitcoin would actually, it could actually potentially hit $1 million per coin. But that's just super long term, and things like that. But I do got it price target for 2021 at 40,000. It's already at 38,000. So I'm a Bitcoin bull. I've been holding Bitcoin for quite a while, and hey, gotta get you some different revenue streams in Bitcoin, Litecoin, Dogecoin, Ethereum, Bitcoin Cash, Ethereum Classic, Ripple, XRP, you got Stellar, you got Tezos, and a few others that I just consistently invest in in small increments over the past years, and that I'm going to continue to do that in, as now I can see my investments just paying off. I've been seeing them paying off slowly for surely, but now it's really paying off because they're booming. But back to CleanSpark. It's an advanced energy software and control technology that enables plug-and-play enterprise solution to monitoring energy challenges. Its services basically consist of intelligent energy monitoring and controls. Their microgrid design and engineering, consulting services. They got turnkey implementation services. The company software allows energy users to obtain resiliency and economic optimization. So definitely a great play in renewable energy, a great play into Bitcoin. I think it's going to keep running up. Maybe not 600 per year, but I see it steady running up, especially with Joe Biden being in office too. On top of that, then the banks regulated Bitcoin or the blockchain, whatever, to be sold, to be held as like regular currency. So definitely bullish on that. Then we got ticker NOCT. This is a NASDAQ power buffer. This is something that was down like 10% in the pandemic. It finished up 10%. This is a new IPO. It came out, November 2019. Typically gains about 3% a year on average. A nice little growth play. Not super growth, but it's safe growth. And it's a buffer for losses and cap gains in the NASDAQ 100, over a Pacific holding period. And it is also an actively managed company. So it's similar to the past ones that I mentioned in this video. Then we got Fubo TV, ticker FUBO. This is something that I've been swing trading heavy this month. In my Robinhood position, I'm up 1.32%. I'll probably hold this in like 5 different brokerages at this point. Here recently, it dropped. It was up like almost 500%. Dropped down, quite a while. It's still up 163%, but believe it or not, it's got a lot of potential to run back up. Good EPS. They've been acquiring more online subscription as they go. Their projections look very well. I think they're the largest, third largest streaming platform, besides YouTube Live TV and Hulu Live TV. They did acquire a gambling company, so you can basically get on the app and watch your favorite sports team play and bet on them at the same time, which is pretty cool and pretty unique. I see gambling, becoming kind of nationwide, kind of like MJ, where it's less restricted, less bans on it, and becoming more popular. I think the U.S. government can use those streams of revenue from MJ and gambling. So I definitely see in that sector, helping up, opening up. And like I said, Fubo TV is a streaming platform as well as an online gambling platform. Then we got ticker FVRR, Fiverr International. Is something I hold long term. I'm up 4.87% on Fiverr. This company here had a great year. Really wasn't affected by the pandemic at all. Just ran through it. Was up 788% on the year. This is a recent IPO from back in June of 2019. Great bullish analyst on it. Great EPS. Software company out of Israel, and they basically develop e-commerce platforms that allow people to buy, sell digital services. It operates, in U.S., Europe, Asia Pacific, and basically the rest of the world and Israel. So basically everywhere. They have film, digital marketing, graphics and design, video and animation, writing and translation, music and audio. So a great company to build out e-commerce platforms and websites for these major corporations. And as everybody knows, e-commerce is on a tear, especially this year. So definitely something I'm still bullish on. Gonna swing trade, try to build my position. Then we have my IRA account, my stash account. As you can see, I'm up $111.92. My percent gain in this account is 43.89%. I've invested $255 thus far. My top holding is Upwork Inc. It's 8% of my portfolio. It's worth $28.98. and it is up 163.45%. And then my last pick for the day, we got DraftKings, ticker DKNG. This is a gambling platform as well. This one wasn't affected by the pandemic at all, up 363% on the year. Recently IPO'd back mid-2019. I'm currently up 40.68%, so I'm doing very well on DraftKings. It is a growth play, great analyst ratings. EPS hasn't been great, but it will get a bounce back. You know, they're just been reinvesting into the company and the marketing, things of that nature. And like I said, it's a digital sports, entertainment, and gaming company. It provides online and retail sports wagering offerings, online daily fantasy contests, and online casino games. So definitely very bullish on DraftKings. I hear about DraftKings pretty much, you know, every time I watch a sports podcast or watch a sports game, I'm hearing about DraftKings, seeing it somewhere. But yeah, that's it for today's video. Hit the like button, hit the sub, hit the bell, follow me. I'm going to go ahead and make about 6 trades. I made 17 earlier yesterday. I spent about $600 yesterday on some trades. So I'm going to go ahead and buy about 6 more for today. And then tomorrow I'll be buying in 24 positions. So I have 12 brokerages. I show all my deposits, all my withdrawals, all my buys, my sales. Completely 100% transparent. I update you guys with the price movement, stock news, my gains, my losses. And as you can see, I come at you with stock picks. Some very popular plays like values, growth plays, blue chips, IPO, SPACs, ETFs, precious metal sectors, you know, sectors outside of the U.S. Pretty much are all around the board. The umbrella's huge. I'm going to cover everything everybody else is covering. Plus, I'm going to come at you with those unique plays, with those massive gains. So I appreciate you guys for tuning in. Thank you.